Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, October 21, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, basically at the end of the day, the market just went sideways. She's above all the moving averages, and as we know, the trend is in fact your friend until otherwise proven. So between Friday and today, there's no material change with the markets. However, there's always a, but wait, there's more. We're going to take a look at a relationship that we don't look at all that often, and we're going to see if it's telling us something's going on. We like to look at divergences, relationships if they exist, to see if something is, as they say in the trading parlance, amiss. We'll get back to that later. Here's a weekly chart of the SPY. As you can see, they're getting a little bit extended, and I mentioned little bit extended from home base. They can certainly go higher, the 20-week moving average, but we're just noticing in development is they're getting a little bit stretched from home base. When markets get too far from home base, they like to either go sideways for a while and let home base catch up somewhat to price, or they pull back somewhat and let price come down toward. They don't have to come to, they come toward home base, and what it does is it works off some of that air-quoted overbought condition. The next target we have on the upside is 487.70. After that, it becomes 490. Might want to write that down, put it on a sticky note. There's nothing wrong technically with any of these charts. We are in what's called a melt-up situation. We're going to come back to the S&P in a moment because I want to discuss the thing that I mentioned before that I'm still teasing. But first, before we get to that, I want to talk about RNA was a live room situation. Hey, David, RNA's on the move. Do you have a support number? Looks like the support number is 46. What happened? RNA went to a low of 46.01, bounced up in the next 5-minute candle to a high of 47.56 in a matter of minutes, $1.50 off 46. The point here is, repeat after me, the numbers work. By the way, here's a swing trade from the Lazy Swing Trader Automagical Algo System. Took profit on Friday in Monster Beverage. This was the third profit target at 54.02. Already was a risk-free, emotionless trade. Just pointing out here again, we picked off the low, $44, and we're out at $54, a $10 move on a $44 stock. You can do the math on that one. Math is universal. Back to the thing I want to discuss with the SPY. So here's the situation. Let's just take a look at the daily chart. What do you see? You see a market that's been going up. It's in a bull market. They're above all the moving averages. The trend is up. There's nothing technically wrong with this market. Fair enough. We can all agree on that, notwithstanding the wall of worry stuff. Forget about that stuff. Just looking at the chart and looking at the price, those things are facts. They're at highs. It's a bull market. They're in an uptrend, and there's nothing technically wrong with the market when you look at those things. Fair enough. Now, let's compare and contrast the chart of the VIX. And I don't talk about the VIX all that often because when the VIX isn't doing anything, and it's at a very low price, around $12 or something like that, there's not a lot to talk about with the VIX. It's not really a tradable instrument for all this kind of period of time, and it does this a lot. You can see back here, there's nothing to trade in the VIX on a regular basis. You're actually looking for trouble when you do that in most cases from people that don't understand that it's not a great trading vehicle. However, it's great for periodic or points in time spike ups like we had during the pandemic, like we had over here in the summer. Well, the one thing I wanted to point out tonight is let's compare and contrast the fact that we're calling the VIX in an uptrend, not above all the moving averages, but just about above all the moving averages. Just the 20 is left over, and they can be above the 20-period moving average in a flash. So they're basically in an uptrend or a rising situation, and this happens to be somewhat of a pullback-ish pattern. We can make a case that you've got a bullish, flaggish, pullback-ish pattern setting up for another move higher. That doesn't mean it begins tomorrow. It's just the concept of what's going on here. You've got a VIX that is developing a bullish situation. It's above moving averages. They're not leaking. They're not bearish. They're not falling as you would expect to see when you look at the S&P at all-time highs. I mean, look at the weekly chart. You're at all-time highs, and in terms of the weekly chart of the VIX, you have a rising situation. You have some higher lows. So it doesn't jive, as they say in the trading parlance. I think it's something worth keeping our eye on. Here's what we're going to use. We're going to take this weekly chart. We're going to take the last breakup candle in the sequence. The low is 1647. We're going to use a ballpark number for the purposes of this video, and we're going to say 1650s are bogey. Start getting below, closing daily and weekly below, and that whole conversation about the VIX in an uptrend at the same time as the spider in an uptrend will have changed. If the VIX is down below 16.5, for example, we would expect the SPY or the S&P and other markets to continue on the rise. Right now, we're in the camp of, hey, something's got to give. What about inside the numbers today? Don't forget, we have stocks on the move. Now you're starting to see, or you will start to see, earnings season fire up. Today was Monday. Monday are always quiet, Monday mornings. However, after the close today, and then Tuesday morning, and after the close Tuesday, and then beyond, that's when they're going to start coming in buckets, meaning the earnings reports. There'll be plenty of stocks on the move going forward. 1 out of 2 hit its entry objective today. Camping World, they leaked into the number in the afternoon, got there about 2 o'clock in the afternoon, a little before, gave you the bounce, and then leaked into the close. This is not the trade we want. We want the trade when the stock is coming down, not necessarily right at the open. It doesn't have to be that way, but we want when there's participation in the market. There's more participation in this part of the market during the morning session than there is in this part of the market in the afternoon. When the volume and the participation dry up, you've got the tale of two tapes. It's like two different markets. I discuss and describe these things all the time in the live room, which is why I call it a morning business. And then don't forget about the table with the new markets we're covering and providing for Inside the Number and live room members. We actually have added a market over the weekend by request. I added GDX smack in the middle. And this is in a beta test situation right now. And if I continue to go forward and do this on a regular basis, and we'll make that determination, let's say by the end of October, if we do this on a regular basis, it's a lot more work in the morning. So I'm going to raise the price. And it's just that simple. I'm providing a whole lot more value, a whole lot more information, and I'm raising the price. Period. Full stop. What I'm not doing is raising the price on existing members. If you're paying, let's just say $129 a month, and the price goes up to some other number, which it will, you're still going to pay $129 a month for this. I'm never going to take an existing member out behind the woodshed. The annual plan will be more, but if you bought an annual plan and your annual plan is $12.90 or whatever it is, you're going to continue to be renewed if you want to renew at that same annual plan number. The new annual plan will be a lot more. Let's take a gander at the notes from today. 9 o'clock, what's the scoop today? We've got 582.60 as our early pivot. By definition, above a pivot, she's bullish for a bounce. Below a pivot, She's not, has trouble rallying, and can leak or go lower. 582.60 is our pivot. Right of the vertical is today's activity. Here's a 5-minute SPY chart, and you can see in and around the pivot was an important spot. I mean, for example, look at this right here where from underneath, selling off, decides to bounce, runs a test of the pivot, gets rejected, has to build some energy to get back above the pivot. Isn't that what happened? And by the way, once she gets above the pivot, what does she do? Comes back for a retest of the pivot. Could have broke lower at that point in time, decided to hold it, started going lower again, came back for another retest, gave it up back and forth into the end of the day. The pivot is important to know whether you as a trader should be on the bullish or bearish camp. Should you be on the not short or not long camp? Either way you want to look at it. Having the pivot has value. How much would you pay just for the pivot every single day? Let's take a look at the rest of the early morning schematic, as I like to say. Let's find resistance, support. Let's say she gets below the pivot, which she did. Below 582.15 on candle closes will open the door for a leg down toward a bounce back in the other direction type of situation found at a support zone between 581.35 and 580. Back to the 5-minute chart. There's your 580 down at the bottom. They never got there. It doesn't matter. They spiked 581.35, got to the what's called halfway home or midpoint. Let's put 580 back up there because the midpoint phenomenon is something I teach in the course, and I teach it every day in the live room when it's applicable. The midpoint phenomenon is the place in between. It's the 50% mark in between two important numbers. First, you have to have the numbers to figure out what that midpoint is, but it gives you a third number. Folks in the live room know about this phenomenon. So here's what happened. Remember what the note said. The zone, the support zone was between 581.35 and 580, or a spike of 580 was really down, a spike of 580. So there you have it. It was 579.80. You'll see it later in the notes. They came to the midpoint phenomenon and did what? Bounced back up in the other direction. To where first? The pivot. Once they got going, they ran a test at a pivot, 11:55 a.m. Why is that important? Because I told traders in the live room that they had waning velocity from an intraday perspective today. Velocity, look it up. It's about time and price. Distance traveled, time and price. How can you figure that out? Waning velocity means they should have been putting in what I like to call the morning low. What did they put in? The morning low. Exactly where? 11:30 a.m. Eastern Standard Time, as prescribed. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. Everything traders need to know from an intraday commentary and numbers perspective on the SPY, and then numbers markets. I think there's a total of 11 markets here, and that doesn't have to stay static. It will be somewhat dynamic. It could grow, it could shrink a little bit, but if I decide to go forward, there'll be a minimum of 7 or 8 markets on here. It's based on demand. Remember, this ties back to the conversation we had about the VIX. We have a divergence today in Camp IWM. So at the end of the day, they're down $3.50 or 1.57%. The S&P or the SPY was down 96 cents or less than 0.2%. So there's a divergence here. And remember, the IWM or small cap space is my favorite market leading indicator. Why is that? We've got some people maybe newer here that are watching the videos that don't quite understand why the IWM is even covered. Why is it a leading indicator? They don't necessarily buy the story, and they've commented accordingly under the video. So I think maybe now's a good time to address that situation. So why do I think the IWM is a leading indicator? Why is it my favorite and has been for a long time market leading indicator? Very simply, it's a small cap index. There are no dividends in here. So it's totally different than a lot of big stocks that we talk about that have dividends that you find in funds, the growth stocks and value stocks and S&P stocks and Dow stocks and all that stuff. Here, some of these companies make money, some of them don't make money. Nobody pays a dividend in here, and this is where money goes when they're looking for beta to the SPY. They go here for growth. Or I should say alpha, not necessarily beta. You have beta to the SPY most of the time, but they're looking for outperformance, which is alpha to the S&P and Dow. So typically, money hunting for growth will flow into the small caps first, and it can be a leading market indicator. Well, if that's the case, then the flip side must be true, and it is, which is if money's flowing out, is it going to flow out first, which is why it's a leading market indicator. Money flowing out of the small cap space is a red flag warning, flare up in the air, whatever. It doesn't necessarily tell us anything directly or guarantee us anything, but what it does do is raise our awareness that something may be developing from a divergence perspective, and so therefore we take heed. Right now, they're above all the moving averages. The trend is your friend. There's nothing wrong. Yeah, they had a down day, and if tomorrow they have another up day, either a retracement of today's move or just a big up day, we'll just ignore the down day and we'll move on and say above all the moving averages, trend is your friend. Weekly chart is bullish, daily chart is bullish. There's nothing wrong with the IWM. But if we continue to see a divergence to the S&P and we continue to see outperformance on the downside and continue to see a rising VIX as the S&P really isn't breaking, we know one of two things has to happen. Either the S&P has to finally roll over, or these divergences and or leading market indicators have to flip around and stop telling a tale that's not true. So it's either going to be true or not true, and time will tell, and at this time it'll likely be sooner than later. How do you like them apples? What about my second favorite market leading indicator, but a number one canary in the coal mine? Down about 1%, less than the IWM, but significantly more than the S&P. 193 bones or points. They're above all the moving averages, yes, coming in to run a test of the 20-period moving average. Will she get and stay below, or will she bounce off or not even touch the 20-period moving average? Obviously, time will tell. We'll see where we are tomorrow. And then you have the next big-time breakup candle low in the sequence, the low being just under 16,000. That's going to be an important place. You have a gap down below and a 50-period moving average. So we'll see how these divergences unfold over the next several days as earnings season begins to do what? That's right, heat up. What about the Q people? Is there anything wrong with the Qs? Absolutely not. They were up 95 cents today, or about 0.2%, roughly equidistant to what the S&P was down today, give or take a couple of basis points. Nothing doing here. No material change on the chart. The trend is your friend. Weekly chart is up, but you're not at new highs. So again, this must be noted, and we must continue to remember this and talk about this. Yes, the trend is up, but the Qs are not at new highs. A lot of stuff is at new highs. A lot of individual names are at new highs. The Qs are not at new highs. The semis, which we'll look at in a moment, are not at new highs. The S&P is at new highs. Some of the Mag 7 stuff is outperforming. The market is not necessarily broad, and you can say it's broadening out. That may be true, but not everything is at new highs. You haven't even retested yet the former high from July of this year in the Qs. I think that's worth noting. I think that's important. Maybe they will, maybe they won't. Are they setting up for a lower high? Did they just put in a sign and or signal of a trend change in an on-time type of situation? Did that just happen? I don't know. Maybe it did, maybe it didn't. If that's the case, you could get one of these lower high situations. Interesting stuff. Let's move it along. How about the financials? XLF They were down 38 cents today, 0.8%. They're way above the 20-period moving average. No wonder they're coming back down toward, in an effort to eat off some time off the clock, come down toward home base, eat off some of the air-quoted overbought condition that there's no measurement for. Any way you want to slice it, that's what's going on. $46, give or take, plus the 20-period moving average is going to be support when and if they get there. Write that down, put it on a sticky note. We'll leave it at 45.90, around the 20-period moving average, also in the vicinity / neighborhood of the most recent breakout area. Will they come back to pay a visit? Yes, they will. When and how they do it is a different program altogether. The semis, here's a situation where we have lower highs. We have higher lows, but we also have lower highs. We have what's called in the trading parlance a conundrum. The SMH has a blue line running across the screen, 249.83. Why is that important? SMH, this is the table printed for members each and every morning. 249.83, support number one. Funny how that works, isn't it? 5-minute chart, 249.83. The number, been talking about it ever since it happened. The SMH was down about $14 that day. So now they have a dead cat bounce. Now they're eating some time off the clock. Maybe they're eating time off the clock to run a test in the vicinity of that breakdown candle. So you have this eating time off the clock, and then all of a sudden, maybe you get a breakup toward the top of that breakdown candle. But here's the deal. Until or unless they get above and stay above the high of this candle, the high is 262.11, then it's no dice, and my stand will be that as long as they're above all the moving averages, there's nothing to do here. But if they start to leak below the moving averages, I believe this bearish pattern will begin to play out. I think other markets will start to come down. I think the SMH will be our canary in the coal mine for the tech space. Without the tech space, the whole market's not going anywhere. And I believe that this day, until proven otherwise, until they take it off the board. And how can they take it off the board? By closing above it. Daily close above that candle. Until or unless that happens, I believe this is our tell of a correction coming to a chart near you. It's not here today, may not be here tomorrow, but until they give this up, until they take this off the board, I think this is the canary. I think this is the shot across the bow. We'll see what happens. SMH. Write it down, put it on a sticky note, keep it handy. If I told you how much I appreciate each and every one of you, without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again.